right, Joe, bro. I don't know if this is on today. I just clicked on the link to see if it was happening or not. I haven't heard from Czech.
Just me and you.
Yeah, bro. I don't even know if it's on, right? I don't know.
Yo.
Oh, it is.
Oh,
He's the
really?
man.
Of course it is. You wouldn't be sat on Zoom if it wasn't on.
You've been about 10 minutes waiting for you.
I know. Well, I switched it on because I knew you guys would be waiting, and then I realised that my heating's not on. It's fucking freezing in here, so I probably should go get some socks on. And it's been 63 seconds, Joe. Your perception of time is very, very wacky.
If it goes in half hour, I've got to 20 fingers.
Again? It is chilly. I felt like it was getting warmer, like start of this week. I get these stupid weather updates on my phone, as everyone does, right? And it was like it's going to be 10 degrees this week, and I felt like we had a really warm day, like Monday or Tuesday, and then since then it's been fucking freezing again.
Yeah.
I'm like a postman as well. I live in shorts. I have like one pair of jeans and I wear them very, very rarely. So I'm always like either in gym clothes or just like comfy like lounge shorts. That's kind of like my daily wear. So Anna keeps saying to me, she's like, if you're cold, put some trousers on. And I was like, I don't own any trousers. I don't like this. I don't have trousers I can wear. And I don't know, wearing jeans around the house. Do people do that? Is that a thing? That's like that's not.
I'm always in jeans, bro.
Oh yeah.
Yeah.
I
love them.
I find them constrictive. I'm like full commando baggy lounge shorts. Like that's my lifestyle. I love it.
Right. My legs probably aren't as big as yours, though, right? Meet your weightlifting legs.
Yeah, that's it. Yeah, fair. All jeans are skinny on me. Right. We'll just get stuck in. Obviously, I've not been at the charts a huge amount this week, so I'm sure there's lots of stuff I missed. And I think that's kind of the purpose of these sessions, really, is to make sure we are data testing for me is about tuning your eyes into the markets. And Gary, Mark, Joe, for you. So the lads yesterday, Linny, have been through the ISC MSU part of the course yesterday. So they've learnt the entry model yesterday. So I think the end of week markups now and the end of day markups and things like that, they'll start to make a lot more sense now because you understand the entry model. And you probably had a good idea of it anyway. But the point of these sessions is to dial your eyes in. These are like the drills that you perform. These are like positions that you do at the gym. These are like every shot that you take at the driving range. Okay. And what we're trying to do here is we're trying to condition ourselves to be able to spot these things and notice these things in live market conditions. Okay. And we are cherry picking. Okay. We are hindsight testing. And a lot of people frown upon that and say that, it's not, you shouldn't be cherry picking. You should be like playing out live market conditions and using the replay tool and all that bullshit. I've done both ways. And I personally feel like this is the most efficient way to get you better at trading. And I use the example all the time of being at a driving range. Being at a driving range doesn't simulate how the experience of playing golf is, right? It's not, you don't go down the driving range and then immediately able to hit, under par at St. Andrews, right? That's not going to happen. But what it will do is it will teach you and learn you a core skill, which is driving that ball straight and as far as you can, okay, which in a game of golf, round of golf, in a round of golf, okay, is going to benefit your overall results, okay? So that's the point of these sessions ultimately. So on Saturdays, we'll always do EU. So I'm just going to go into EU. Just close that down. Oh my God, it's so fucking cold. Got this one room in our house. This house has been like extended twice. And this one room in this house is basically
Get one of these.
What is it?
Hot water bottle.
Yeah, we got one hot water bottle in the house, and Anna's using that at the moment. They when she had her op on, this is amazing, right? So she had her op on Wednesday night, Thursday morning, and they filled her full of gas. Have you heard about this?
Hmm? Oh,
So when they're doing surgery on like abdomen, okay, and they're going in to like look about effectively, they fill your body with CO2 gas. What it does is it inflates you and dilates everything, and as a result of that, it means that they can basically see better and move around better when they're inside. Um, Never heard of it. I worked in my background was in private medical care, right? And I spent all day long talking about health problems and medical conditions. Never heard about it once in fucking 15 years. And apparently that's a really common practice when they're going in the abdomen. But as a result of it, she's had this agonizing pain all down the right hand side of her body, where it's like an after effect of the gas. So she's got this pain in her shoulders and stuff, where this CO2 is still in her, and it takes like a week to come out of your system. Just like fucking nuts. I'd never heard about it before. Anyway,
doesn't sound nice at all.
no. So yeah. So long story short, the hot water bottle is severely out of bounds at the moment.
That's just
Right.
sound.
Right. Let's get stuck in. So, what was this? This was our no, I don't want another one. Let's use the capital one. So, Wednesday, Tuesday, Monday. Okay, cool. Sunday. We had a massive opening gap, so it was there, wasn't it? Let me just open up a new tab. Can you see my second window, guys, or can you only see the first one still?
Just one.
You can see capital.com if that's what you mean.
It's still on the charts, is it?
Yeah.
Okay, cool.
What causes that big gap? What something happened over the weekend and then
Yeah,
it just
Trump
opens a
tariffs.
different- Yeah.
So basically, Trump came in over the weekend and said that he was imposing tariffs on China,
Canada,
Canada, and where else?
Mexico.
Mexico. Yeah. So the Trump obviously posted those tweets. So you'll notice over the next few years, really, Trump's going to have quite big impact on the marketplace, especially with tweeting. If you look at Trump tariffs, the reason why Trump tariffs, Trump talking about tariffs are effective is that the 10 biggest companies in the world are all American. So you've got like Apple, Microsoft, Meta, Google, and various others. Wait, funny enough, I was looking at this morning.
Ego was bashed a little.
10 largest companies in the world.
BlackRock and Vanguard, mate.
I know.
Apple,
They own
Nvidia,
everything.
Microsoft, Amazon, Google, Meta, Tesla, and TSMC. So those are, and Broadcom, sorry. Those are the 10 biggest companies in the world, other than Saudi Aramco. Only one of them is not American. So anything to do with tariffs is going to have a big impact on the dollar. Any major pair is going to be severely impacted by it. So, that's why we had these massive gaps all over. Again, this is, for us, the fundamental analysis is important. Like, it's really important to understand what's going on. And if you're not spending time looking into the fundamentals, I would highly recommend it. I'm no expert on it. I know more than most. I'm no expert on it. I do a lot of research on it. I do a lot on ChatGPT about it as well, because that's really handy at like filtering down information. I would have an account with something like Investopedia or FX Street, or something like that, because they have various news articles, and just kind of read regularly. A lot of it's really boring and samey, but it can be really, really helpful, of course. So, funny enough, I'm actually doing a qualification this year in fundamental analysis with a ex Barclays trader. He's quite a well-known guy in the kind of the trading world, and I'm doing a mentorship with him because it's something that I really want to master and I really want to learn ultimately.
Is it the guy that's always advertising on It's Narrow Edge or whatever his name is.
Him?
It's
No,
that
he's a scammer. You're thinking
No,
of
because
NV.
before I joined you,
Yeah,
I was going to do his course, right?
yeah, he's a renowned scammer. If you look at any of the reviews of his course and mentorship, he is, called out by everyone. I don't think he's got a positive review on the net. Yeah, I see Nirav, I think his name is. I can't remember, but yeah,
Arab, that's the guy. He was
yeah,
always advertising, and
yeah.
he
No,
was
this is
chasing me. Like, hey, do you want to? Because you get a sim. It wasn't like your what you're offering, but it was some course, and
yeah,
he's got a different tool that you could actually see inside the candle that the banks use, as you recommend.
yeah. The order book, but the order book doesn't work on
Can we?
Forex. The order book doesn't work on
Ah,
Forex. I mean, so order books work with futures because it's a centralized market, but Forex isn't a centralized market. I mean, look at this, for example. Okay, so if I type in Euro USD, that's 10, 50, 1, 2, 3, 4, 5, 12 different broker feeds. Okay, every single one of them is
hmm.
providing different data. Okay, whereas if you type in like NQ, okay, you have one feed. Okay, NASDAQ futures, you have one feed because it's a centralized market. So the order books don't work. If you look at, like, again, at Euro USD,
Okay,
if you
okay,
use
that
an
makes
Euro book
sense.
tool, an order book tool, it can only grab, if it works with one of these, it can only grab data from one of these feeds. All of these feeds are retail traders ultimately. FXCM, Oanda, Forex.com, Capital.com, IC, Pepperstone, they're all retail brokers. Okay. You haven't got institutions placing orders with fucking Forex.com. So the information that you get from these order book tools is highly inaccurate. So
Okay, that makes
yeah, they only really work on as a website you can use called Bookmap. You can look at things like I think you can look at Euro futures, for example. So if you go Euro futures, okay, there is a Euro, so 6E, there is a centralized Euro futures market, which is very, very similar. So you could grab data off that. But yeah, it's one of those things that, like we always say, there's many ways to skin a cat, right? It's just one of those things that is there. Um, but yeah, that Nirav guy, from what I understand, I've never done any of his education, but from what I understand and what I've researched, because I've seen his ads as well, he's hit the reviews are generally terrible, is what I've seen anyway. But yeah, the guy I'm working with, he's just a fundamental analyst basically. He's an expert in the field, and he works for like various hedge funds, and he trades with like very, very, very sizable amounts of money. So yeah, so that information will be obviously duly shared and passed on to you guys. And there's potential as well. He's pretty keen on working with us and our community. So
actually what
carry on.
what that's Chris. I just want to say what that tells me is that you're still educating yourself. That's a
100%.
good sign. Yeah.
Yeah, 100%. I think from a technical standpoint, my knowledge is up there. But again, I'm still learning things all the time with my own trading and, filtering out mistakes. The way that I trade now from the way I traded, say, a year ago from the last course is similar but different. Definitely more refined, definitely more efficient, definitely more profitable than I was a year ago, 100%. But the fundamental side of it now, I'm using a lot more in my trading. I was very much just like a technical trader where I just traded the patterns of the marketplace, the what's happening in the candlesticks. And recently I've been doing a lot more research on fundamentals, the news, economic factors, macro view, that sort of thing. And it's been really helpful. Linny will know from being in the community. We've been discussing ideas and sharing ideas and using them to influence our trades, and it's definitely been helpful. So, whatever I can do to master that skill, as I see that it's like a chink in my armor, so to speak. Now, if it can keep me safe, if it can keep me out of a trade or get me into a trade with an extra confluence, then it's only worth it, right? So, what's quite good about Drew as well is that Drew's pretty keen on coming and do maybe like a monthly spot with us. So once a month, he'll come and join one of our live sessions, and he'll give us a bit of a rundown of the marketplace, what to look out for, and things like that as well. So that's coming this year, which is really, really quite exciting. Right. Anyway, let's get stuck in. What we 9:45. Okay, cool. So the good thing about gaps is gaps have a habit of being filled. If you connected the dots, for those of you who are newer, if you connected the dots from this gap to this gap, what do you effectively have here? You imagine that there was a candlestick from here to here.
Trap.
Institutional input, isn't it? Cash
Yeah,
injection.
yeah. So what sort of candle would it leave behind?
A large candle.
Yeah, a large what candle?
Bearish.
Bearish candle. Okay. And what would that bearish candle, what would be the properties of that bearish candle?
Very small wick. And
Yeah, probably no wick because it's literally closed and opened immediately.
yeah, so it's yeah.
What do we call those candles that are just one straight candle all the way down?
Yeah. I don't know. Can't remember. I'm gonna write it down there.
Momentum candle, do you mean?
Yeah.
I can't think of the right
candle.
answer, really. Or an FVG candle.
Yeah.
Imbalance.
Yeah, imbalance candle, right? Okay.
Imbalance, that's
That group, from that group down here, okay, would be a massive imbalance candle. And what do we know about imbalance candles? Are they efficient or inefficient?
inefficient.
And what does the market hate?
Inefficiency.
Inefficiency, okay? So the good thing about big gaps in the marketplace is they can give us quite a clear target. And that target can be, over the next few days, very likely that the market is going to be filled. Now, you can see very clearly, structure starts printing quite bullish. Probably don't get an entry for me if I'm looking at this until the New York session in the afternoon. So let's have a quick look. Failure to make a new low there. So we could put our first break here. We then have a true break up here. One of the things I wanted to clarify as well. So possibly I've confused you guys, and if so, apologies. Okay. We spoke about first breaks and true breaks. Okay. And we spoke about them in great detail. Okay. And I want to just clarify a point. So if a candle, nope, not that one. If a move in the marketplace wicks below a previous low to the left, okay, we would class that as a false break. Yeah, everyone with me?
Say that again, Chris. Repeat it once more time.
Yeah, repeat that. Sorry.
If a move in the marketplace breaks and wicks below a low to the left,
only
class
wicks
that as a false break. Okay. Why don't we class that as a first break?
You haven't had a true break yet. You don't know which way it's going to go.
It's just
Thinking more about the candles themselves.
The candle hasn't closed.
Candle hasn't closed. Okay. So a wick below. Actually, I'm going to draw a better example. Let's do this, and then let's do this, and let's do this. Okay, so we're in bearish market conditions. Okay, for argument's sake. Okay, we've created some new structure, and we've wicked above here. Okay, this move can be a false break because it has wicked above that high to the left, and therefore can give us a trap. Okay.
But it's only a wick.
But it's only a wick. So therefore what it can't be is a first break. Okay. Now, it can become a first break if we get a clearly defined true break. Okay. It can become a first break if we get a clearly defined true break. But that true break itself is going to be weaker than if this move had clearly broken above. Okay, so not all first breaks and false breaks are created equally. Okay, we could clearly see that this is a first break if the candle had broken above.
Yeah.
Okay, If it had only wicked above, then really what we should be doing is we should be dragging that across and saying that actually the first break isn't until here. Okay. It has given us a little bit more confirmation because we've had those wicks, but we haven't actually had a first break until the candles closed above, which means structurally we would want to wait for a true break to occur before the market has actually confirmed as a bullish shift. Okay, so I've had this question a couple of times recently. I just wanted to clarify it on a video so you guys have got it. Okay, if price just wicks above, that is a false break. Okay, it's not a first break, and therefore it adds evidence and gravitas to our reasoning for going short. Okay, we can then use that as, for example, an ISC. We could then use this as our MSU, and we could then trade off the engulfing down towards the trap. And that position is more likely to play out because we've only had wicks above. Okay, if you've only had wicks above, then it's only a false break. Okay, and it shouldn't be considered as a first break until we get clear confirmation. Now, if you've got something like that, this then becomes a false break or a first break, and it can still do this. Okay, because it's still only a false / first break. In order to confirm that move, okay, you need that second break. Okay, and that second break will then usually give you your true break, so we can then start buying back up. Okay, the beauty of this little filtering process is even if you get this, price is still very, very likely to come down to the trap. And I think, Mark, we spotted this in one of your trades last week where you traded into the trap and then it rejected that on that gold trade. It rejected that trap. That's exactly why we take profit off. Exactly why. And I tell you what, let's just, whilst we're here, I'll see
that example Mark done. I thought it was pretty good.
Yeah, it's decent, really decent. And it's really great for me as well, seeing these trades playing out for you guys as well, because it's always like a nerve-wracking part of the journey for me, because obviously we learn all this theory, and making sure that we understand it fully is really, really important. Okay, making sure that it's working in practice is really, really important. So this is a perfect example of exactly what we're suggesting. So let's say on a higher time frame, this little wick below here was his first break. Okay, one of the things I would do, Mark, with your trades is these lines here, these multiple lines. You don't really need the multiple lines. I would go to a time frame where, unless you're acknowledging that the market is shifting, okay, which, yes, you've had a 5-minute shift here, so yes, you've had a 5-minute shift back up. What I would suggest that we do is we acknowledge what is the false break that we're effectively dragging the trap from, if that makes sense.
I'll be honest, Chris, with that, when you said about is there liquidity from the left, I just drew some line. Obviously, the screen weren't big enough, but I wouldn't have normally had that on there, to be honest. So,
with your trap as well, I would always use the last. So if it's a trap on the buy side, I would use the last move up as the top and the bottom of the trap, rather than, I think you've used a candle in here. Okay, so I'll show you what I mean.
Beautiful.
Where's my candles gone? Hang on.
What about the other trade, Chris, that I actually took in the wins, one that I put up yesterday? Is that because I just felt like that seemed the same pattern? I didn't actually particularly mark it up at the time, but it just looked like the right pattern, and it just felt right, if that makes sense. And obviously I put that trade on.
Let's go through it. So with your trap, I would normally use the last up move. So you could drag it from here. Okay, that's an option because that is the origin of the up move. I would probably, using common sense, I would probably use that level to that level. Okay.
Yeah.
That would probably be my trap. Okay. I would also acknowledge which one of these. So use your, your 15-minute time frame or your 30-minute time frame, whatever it is. You probably wouldn't have that. I understand why it's on there now, but you probably wouldn't have either of those. Okay. Because what you're effectively doing here is you're saying that's the FB, and therefore this has to be a TB, which you've then correctly have acknowledged that you needed an FB and TB to move back in the right direction, of course. All right. But I would just get into the habit of doing that so it's clearer on your chart. But coming back to the original point I was making, if this therefore is our trap, okay, this is exactly why we take profit off at the bottom of the trap, okay? Because as you've seen here, if this is a shift to go bearish and give us a true break, which I believe we did on gold afterwards, if this is a shift, price will very often come back to test the trap first, and then it will reverse, okay? So if we go back to our trade over here, okay, and we inverse it so it looks like Mark's trade now, that first break could just be literally a first break. We can then buy into the trap, okay, and that's exactly why we take profit off at the trap, because we don't actually know until we get the reaction and therefore the follow through, either this or this. We don't know whether this is a first break or a false break, right?
Right.
Okay. So I just want to kind of clarify that and clarify that point, that a wick below is typically just a false break. Okay. Well, can only be a false break really because it hasn't closed below. A close below can be either a false break or a first break. Makes sense?
Back to Mark's trade quickly,
Yeah.
Chris.
Yeah.
Mark, quick one, Mark. Why did you enter there? Just out of curiosity, because I just wondered why.
Where is it?
Find it. What day was it?
True,
Wasn't it?
just a genuine question. I just want to know why. I'm wondering.
It was Thursday, wasn't it?
Yeah.
It was there. Okay, cool. Right. So this is how I would have marked it up. Okay.
Just,
I'm looking at.
I would have entered around better there as well. I just wondered why.
Looking at the structure, okay, failure to make a new low, and then I've got that. So what I would do is when I've got my low and it's a clearly defined low like this, imagine the chart's over here right now, I'd be looking to the left like you correctly did, Mark, and I'd be marking along this one, okay, as you have done. Set up a template. So I've got templates for all my lines, guys. Stop loss, dead daily, dead weekly, first breaker structure, IFB, ITB, TBOS. Set up a template for each of them. It's really simple to do. Right click on, so change the color, put the text in however you want it to be, then right click on it, template, and then just save as, and it will go into this list then. Okay. So I marked up as a false break, or first break or false break like this. All right. Then you can clearly see on this time frame the trap. Okay. I would just use that low candle to that high candle. That's my trap. Okay. And dropping down to my lower time frame, as Mark correctly did, he marked on a little bit clearer on the 3 minute. Okay. First break here. First break here. True break here. Okay. And then you probably didn't realize it at the time, but can you see your entry now from yesterday? Were you on yesterday, Mark?
No, that's what I was going to say. I went on yesterday.
Okay.
Yeah.
Right. So someone who was on yesterday's session, where is the entry? Now, and the clue is it's after the true break. Who's going to go for it? Joe or Gary? One of you two.
Yeah, I had to leave early yesterday, so I
Right,
didn't.
Joe, it's on to you then, dude.
Oh, thank you.
Right, what are we looking for after we've had the shift?
Manipulation.
Manipulation. Okay, so use your little pen tool. Bottom left-hand corner, there's a little green pen. Click on that and draw on for me where the manipulation is after the...
You read your true break.
Yeah.
Would it be around here? This sort of area?
Yeah, exactly. So draw your manipulation line.
I don't have to rub it out now.
Perfect.
Press Control Z, Control Z.
No, I'll come out of that. I don't know, I've done make that.
Control and Z. Bottom left and then the Z. Looks like an S but backwards.
No, mate, I'm useless to this, mate.
Right, I'll do it for you.
Like that, go on.
Right, okay. Right, draw on your manipulation.
Right, so
the candle you circled is the manipulation, but what are you manipulating to the left? Where are you drawing your line from?
oh, okay. It'd been here.
Perfect. Okay, where's your engulfing after that?
Engulfing candle after the manipulation line.
Yeah.
Could have been bullish one, which would have been this one here.
The wrong way round. So you're looking for a bullish engulfing candle. So you're looking
Oh,
for
yeah, sorry. So,
yeah, you're looking
I
for
can see it.
you got it?
Yeah, yeah. Where's my line there? This is bullish here. So this one here. That's your bullish one
Nah,
there.
you can use this one. You could use this one. You could use this one.
Okay.
Okay, so it's any candle which completely engulfs. So after the manipulation, which you correctly marked, it's any candle which engulfs a previous candle. So that one,
Right. Okay.
this one, yeah, okay.
See, obviously, I didn't know that, Chris, and I'm just looking at the patterns that obviously.
Yeah, I know you didn't.
Look,
I know
do
you
you
didn't.
know what I mean? So it's like,
But that's why the strategy works so well, right?
Yeah.
Because you know, with greatest respect, you don't need an entry model. Once you've had a shift, you can just fucking jump in, place what seems like a safe stop.
And you would have been on any of these manipulation ones here, then any of these engulfing ones here, then you'd
Any one of those engulfing, yeah, anyone, and that's again, that's one of the other things that's quite good about the way that we trade is that there's so many opportunities. Like Linny, you'll know, and Anton from your own trades. Usually, if you miss your first entry, you'll find another position, won't you? Quite easily.
Right there.
Yeah.
Where would you put your stop, Chris?
Where would you put your stop, Joe?
Oh, so yeah, I found put my spot again. Probably just at the previous low.
Okay, so look, that's my entry. Okay, that's my entry right now. Where am I putting my stop?
Well, I'd have put it at the previous low. That's
where?
Personally, down here.
Yeah, so that's an MSU what?
It's an MSU 1.
Yeah, so where's your MSU 2 entry?
For fuck's sake. Mate, I don't know.
I'd say we just were there on that second previous low. Would it be?
Show me.
So an MSU, 2 seconds. Let's do this, right?
So for me, then I'll be looking at that trade and I'll be like, well, that trade doesn't work for me because it gives me 1.4 up to my trap. That's not enough profit for me. So personally, what I would do is I would tighten my stop till I get at least 2. Now that for me is still a very wide stop. An MSU 2, technically, you could go up to here. I don't need 7.5 and I don't need to take an easy stop loss. So what I would probably do logically is I'd probably use this level to the left.
Yeah, that's exactly where I thought. Yeah.
Okay.
Because I'm giving my trade A, room to breathe, and B, I'm using a logical area. Because if you think about it structurally, if the market has shifted bullish like this, and we've had a true break of structure, the likelihood of price coming down this quickly to take out that low, well, look, we could manipulate, and that's the risk of an MSU2, as we discussed last night, is that you could manipulate, and therefore you could find yourself in a situation where you do get a sweep of that low, and then you have to take another entry. That's the risk of an MSU2. That's why we have the rule with an MSU2, you need to be prepared for a second entry, okay? But you've also got to think about it from a liquidity perspective, okay? When the market shifts like this and starts going bullish, you're not going to have a huge volume of traders coming in and placing their stop losses here internally, okay? The most likely place when the market is shifting like this, okay, is that there's not going to be very many traders in here. Most of them are going to be in here somewhere, okay, placing their stop losses above here. Now, in this example, the trap doesn't get blown, okay, because this is a shift. And, supply and demand zone traders and breakout traders and market structure traders, they have to be right some of the time, otherwise they wouldn't trade. So the majority of the liquidity will be sat above here. You're going to have some liquidity, but if you do have any liquidity, it's going to be down here somewhere, okay? Which is why price gravitates towards that level. And if you watch, okay, then blows through that level, okay, because that's where there'll be a big volume of liquidity sat. So the institutions have sold into it. So I'm not looking at these lows and thinking, do you know what, I'm at a real high risk of getting stopped out here. I'm serving a purpose, right? I'm buying back up into this trap. And in my eyes, because we've just had that first break, in my eyes, we're probably going to at least tag the trap, potentially blow the trap to go higher. Now, the anomaly here with gold is that we're at an all-time high here, right? highest price ever printed on gold. Okay, so you're going to have a lot of profit taking and selling off, which is ultimately why you had this big sell off like this. Okay, that's now our true breaker structure. What did it do for the rest of the week? There was another entry, wasn't there?
Yeah, I've got another entry, but that's one I actually entered.
Nice. So let me
Mark,
see if
Mark, do you just trade gold, do you, Mark? Do you
Yeah.
find? Oh, you do.
Yeah,
Only gold.
Mate,
yeah.
that's hard.
But this is why I want to sort of go into Forex, because it can be a bit volatile, like we were saying the other day, weren't it?
Gold is. Well, I've traded gold, and
I lost all my money.
it's not like this.
Mm.
Structured and predictable. I mean, it was just.
Yeah. I mean, it does respect liquidity rules. It does respect it.
Oh, it does.
And that's what I wanted to say to you, ask you about, Chris. Really, is it possible to use this sort of
100%. 100%.
Yeah.
You just got to be prepared for some volatility. That's the
Yeah.
only thing I'd say with gold. You are making it difficult for yourself. That's all I would say, is that it's a beast that needs to be tamed, and it can be tamed. You know, we've had lots of traders in here before who've traded gold and, you know, got on with it quite well using the strategy. I've always just found it, for me, it made trading more stressful. That's kind of my thought process.
Yeah.
You know, it has a real, so it doesn't respect premium and discount as well as our Forex pairs. So what you'll find with gold, if you draw your ranges on,
Can you go to a gold? Is this gold?
This is gold, yeah.
Okay.
What you'll find with gold is it really likes the 50%. So whereas with Forex pairs, they really like coming down into premium and discount, which is like bottom 75%. Okay, so that'd be our discount zone down here. Okay. Gold, and one of the tendencies that you need to learn about gold is it really likes the 50%. So if you look at gold ranges, okay, and you draw out your range low to your range high, you'll notice that 50% zone is where it really enjoys pulling back to. Okay, and that little tweak alone should give you a little bit more. That one hasn't quite made it. Should give you a little bit more confidence when you trade it. Okay, if you notice, it comes down to the 50% and then it takes off again. Okay, and sometimes, as you can see in a few of these examples, see 50%. So look at that. This one here, range low to range high, 50% perfectly, then takes off. Okay, this one here,
every
range
time
low.
as well, right?
Say again.
You notice that EPA as well.
Yeah, EPA as well. Yeah, range low, range high, 50% takes off. Okay, range low, range high doesn't quite make it, but nearly comes to 50%, then takes off. Range low, range high, comes down, 50%, takes off. So that's one of its tendencies that you need to understand. And that's one of the things that, you know, you've got to be, especially when it's particularly bullish like this, you've just got to be aware of, is that you're not going to get, because the way that we like to trade is we like price to come down, right? And to keep coming down. So where it can really fuck you over is it can shift bearish like this. Okay, first break, true break. You then start to look for sell setups, and let's say, oh no, you got in a shit position like this because you're expecting price to come down to this low, for example. Okay, you're expecting price to come down to these discount areas, and then it will just take off without you. But the strategy will keep you safe, because what do we say about counter momentum moves? Where do you take your profit off? If you're trading against the momentum, where's the two areas you take your profits off from? There's first two areas where we would expect in a range from the low to the high. There's two areas where we would expect price to tag and reverse from. And that's where, if we're trading against momentum, we would be taking our profits off. Say again?
Trap.
No, not the trap. So if you're trading against the momentum, so you've got a bullish range and you're taking a sell in this bullish range, there's two first areas where we'd expect price to reverse from. I'll give you the first one. The first one is the 50% of the range. Okay. What's the second one? I want to hand it over to one of the experienced guys.
EPA.
EPA. Okay. So you're either going to have, as Linny. So you're either going to have, and that's why if you trade in counter momentum, what that rule's in place. Okay. For exactly this reason. You're either going to come into 50% and reject, or and this is for a pair that's moving particularly fast, you're either going to come into 50% and reject, or you're going to come down to EPA and reject. Okay. So if you're trading against the momentum, that's where you want to be taking profits off. So with a pair like this, you're probably not getting into a decent trade before you get to the 50%. And as you know, with gold's tendencies, it doesn't like going much deeper than 50%. It means that counter momentum plays pretty much are just off. Okay. And what
I've not put one sell trade on this year. It's all buys.
You wouldn't have that.
For that reason, yeah.
I mean, if you look at the daily, since the start of the year, well, since forever, the big drop off, when was that? 2012. Other than 2012, 2015 onwards, it's been pretty much bullish. Certainly from here, so 2023, it's been bullish. So I just wouldn't be selling gold, okay? Because you get little pullbacks, of course, but it doesn't really go much further than that. All right. So as long as you understand its tendencies, and look, what's that? That's the start of the year, yeah. Okay. As long as you fucking hell, what have I done there? As long as you understand its tendencies, it can be traded. But there are simpler pairs to trade. But look, if it's something you want to trade and you want to master, then we'll work on it together and we'll get you there. Probably what you want to do is you probably want to have like a Euro USD, I don't know, a USD JPY, and maybe we'll have a few different pairs. When we get into the trading part of the course, we'll have a few different pairs that we can utilize. All right. Yeah. Let's have a look at. So we've digressed a little bit, as we often do in these sessions. Let's have a look at Friday as well, and we'll effectively mark up gold. So, where did you take your trade from on Friday then?
9 o'clock. About there, yeah.
9 o'clock. What was it? A buy?
Yeah.
Okay.
Exactly there where you are. I think just at that low of the London session, was it? And this time I actually did mark it up on my computer, and then I've actually played golf and got it up on my phone like that.
Good man. Okay.
That's when I sent it in. So again, whether it was a legit setup or, like I say, I was sort of...
So, the trade played out. So we can't argue with that, right? The trade played out. And I think the framing of it was slightly wrong, and I'll tell you why.
Yeah.
So we had a first break here, and we had a true break here, which means technically the market has shifted bearish. Okay. That therefore was no longer a trap. We had our trap up here, which we traded into the previous day. Okay. That trap actually just became a supply and demand zone. Put it down as that. Okay. We then had a shift. First break here and a true break. Let's just average it out so we can get real confirmation of it. And the market continued bullish. So it wasn't a trap entry.
Right, okay.
It wasn't a trap entry because all we'd done is we tagged into this zone down here and we rejected. That doesn't mean it's an invalid entry. It just had a lower probability of playing.
So when you go on that 15, obviously there's the big wick down. And then it sort of came up, pulled back, and then that's when I entered. And again, I'm just going off sort of the patterns that I've learned rather than the technical part of it.
Yeah.
So again, I've just
I think, look, when you've got a market that is moving, and I'll take trades like this, when you've got a market that is moving and you see a trade, it just makes sense.
Yeah, that's what it felt like. Yeah.
Yeah, there's no harm in it. I wouldn't really class it as a trap because we haven't actually swept. So if we look at the range on the 15-minute, for example, we haven't swept the low, which means that it doesn't create a trap. We go to a 5-minute chart. it's just a bit messy, so it's really difficult to read. And if you argue that this is, say, our range from here to here, then you have to also argue that you shift bearish. I mean, potentially we could class that as a 5-minute FB trap, potentially. It's just not very clear, and I would try not to get into, and actually technically if that's an FB, then this becomes a TB, right? So that's no longer a trap because we've now shifted. So I would make sure we get into the habit of marking up really clear FB traps. That being said, there's nothing wrong with the trade. There's nothing wrong with the trade, but I do think you were lucky with that one, because mucky price getting tighter and tighter. We keep shifting both bullish, then we shift bearish. And at the point that you've entered, we've had a first break here. Technically, you've had a true break there. So we've actually...
Yeah, I was just reading that true break as the first break.
Yeah.
That's why I've got it.
Yeah. Look, the trade played out, so we can't knock it, right? But I would worry that if you took these trades really regularly, then they might not play out. That's all I'm saying, because we're not using. I mean,
it had a really tight stop loss. So
I think if you'd done this, okay, and the market had come down here, and then we had our 15-minute first break there, then that trade would be bang on.
Yeah.
Okay, that would be absolutely great, because you then have a trap up here, and it would have, that's a really good trade then. Okay. But the fact that it didn't come down to sweep any liquidity and give us that false break means that this was just a structural continuation. This was just like your classic supply and demand sort of continuation trade. But you see then how it failed to make a new high. One of the things and one of the rules of thumb that I would have for all of you guys is just make sure that at the end of the first week of the month on a Friday, we have a news event called non-farm payroll. Okay. One of the biggest news events of the month, okay, alongside things like FOMC and CPI, okay? It's one of the days where, unless you have the absolute perfect setup, you want to avoid trading on the London session, okay? Especially anything that's heavily driven by the dollar, like gold, Euro, USD, or anything like that, okay? What you'll notice on a lot of these pairs, on Friday, the London session just becomes really, really tight. Okay, in fact, the GU pairs move quite well. USD pairs, to be fair, so you'll often find this kind of contraction in price where they don't really do a huge amount. And gold, as you can see, it's not really, it's kind of building up liquidity rather than grabbing any liquidity on either side. So it hasn't swept Asia high and it hasn't swept Asia low. Okay, until the news hits. Then you get a big move and often a big reversal. Okay, so just be careful on those NFP days. I think, do you know what I would say? If this was any other day of the week, you'd have probably had a good trade there, because there'd have probably been the volume in the marketplace to come down, grab some liquidity below here, set a trap, and then you could have traded back into it. What I want you to try and do, especially in these next couple of months, is just make sure we're being really, really clear and refined with our trade entries. Try not to blur any of the lines. Make sure all the moving parts are there. You're going to have some situations where you really want to jump into trades because you feel like it's moving the right way. But, and you'll hear this all the time. Let the trade come to you. Let the trade be so obvious you can't avoid. Sorry, let the trade be so obvious you'd feel stupid not taking it. Okay. And make sure you've got, and we're going to build this into you anyway. We're going to build a checklist and things like that. Make sure you've got a clear false break. Okay, of an external liquidity level, which in this example would be the low here. Okay, make sure the market's shifted in your direction. Make sure you've got the entry model, all those little things. That trade over here, perfect, literally perfect. Okay, because it had all the moving parts. Yeah, but you'll have that all the time. You'll have that all the time, right? This trade over here. I mean, you can just see from the formation how different this is to that.
Yeah,
right?
Completely.
Yeah. Okay, and that's what we want to do is. You're going to have some situations where a move happens. And look, and one thing we can see as well is, yes, your trade worked out, but you see how it didn't really gain any ground. It didn't really do anything afterwards, okay? Whereas this one, you've had a clear break. Then you've clearly moved into that, what was a trap at the time, okay? and then we reversed really, really well. It shows that there's institutions at play, right? There's lots of money in the marketplace. This move here, it's weak, and it could have quite easily gone the other way on you as well. And that's the other thing. When you've got weak markets, they have a habit of just like not really moving, but kind of moving, and it can go in either direction. You want those confluences in place, so it's so clear and so obvious, you'd feel stupid not taking the trade, all right? That trade, banging setup, really, really good. This one, I'd say a little bit average, and just be careful of those average trades, because average trades return average results.
Yeah.
Right? And you could take that trade 10 times. It might work 3 or 4 times, but it might fail 6 or 7 times. Okay? Because it hasn't met all the criteria that we need. But what I do like is that you're taking trades, you're making some wins, and look, taking all of that aside, whilst there's things that we could have changed. 2 trades taken last week effectively. I know you only actually executed one of them, but 2 trades taken last week using the strategy elements, 2 trades won. I think that's a really great start. Okay, really great start. All right. So look, sorry we didn't get through to Euro USD today. What we'll do is we'll do Euro USD tomorrow, and I'll make sure I stop nattering and we'll just go straight into the charts. We'll do Euro USD and we'll do a Q&A afterwards. All right. We'll jump over now to bootcamp session. All right, so I'll see you guys over there. Does anyone have any questions? Anton, Linny, anyone have any questions before I go?
That was good. Thank you.
Cool.
Not really. Just quickly jump on EU though.
Yeah, what are you?
On 4 hour or whatever. Just, you're going on about that the false break actually breaking and closing below. Well, that happened on EU, right? That 4 hour first break here.
Yeah.
Not here.
Yeah.
So we get the external sweep, and then that actual closes below, doesn't it?
Yeah.
But yeah, so I was looking for buys on Friday to trade into the trap or to like sweep maybe, but obviously that didn't happen, right?
Yeah.
But I'm just with you talking about it there, that
really good example
gives you more confirmation that it might go bearish, right?
Really, really clear example. You're absolutely right.
And then NFP like hits the trap and then just shit's dead, right? It's pretty cool.
Really clear example. So, you can clearly see that that's a false break. Okay. And what does price do? Well, it reverses. Okay. This one, you can clearly see that it's a false break or a first break.
Yeah.
And that's, do you know what? It's bang on. It's exactly what we were discussing earlier. Okay.
Yeah. You just, that just like popped in my mind. No wonder. Bring it up.
Yeah. Perfect. Yeah, we've only had a wick above there, guys, which is why that can only be a false break. Okay, we can't consider that a first break because there's been no candle closure above. So the reason why I wanted to highlight that is because what it shows us is that the likely play from here is that the market's going to go down. And if you couple that in with that actual first break and the fact that we're overall quite bearish still, it gives us a clear signal that price is likely to move in the other direction. I mean, look, all of that aside, it doesn't matter a huge amount, because let's say you were trading that false break up to the trap, for example. Okay, you might have had a loss on that one, but in lots of situations the market will go to the trap and then it will give you the true break afterwards. Okay,
I was a bit confused on bias on Friday. That's why I brought it up, because obviously it was like it kind of was bullish, but it was turning bearish.
Yeah,
and
Friday was
any buys you're in got took out, and any shorts you're in got took out anyway, right?
Yeah, Friday was tricky market structure.
But I was looking for a buy, but obviously it didn't get one, and then we started coming back down, and then this was like out of session when we got the external sweep, and it was NFP.
Yeah.
So actually longing into the trap did work out, but obviously NFP just messed it all up.
Yeah, fair. NFP did mess it all up, to be fair.
Maybe like I saw that short too. It's kind of like counter trend if you're bullish. But if it wasn't really bearish, then it isn't, right? It's
exactly. There wasn't really any opportunity to get in for the last couple of days, really. I mean, buying back into the trap would have got you, if you'd got in somewhere here, okay.
Yeah, or even like early on, 7 o'clock on Friday morning, there was a good little trade, just too early for me.
Yeah.
If you're like risky, but like there is a shift in here on 1 minute, right? 15-minute external sweep.
Yeah. Yeah, it's mucky, definitely. What we'll do is we'll dig into it tomorrow. We'll go through a big analysis tomorrow, and we'll spend some good time going into Euro USD price action, because I wanted to do that today, but we got distracted a little bit, and that's my fault. Apologies. But this will happen a lot. And as those of you probably already understand about me, we will often get distracted and we'll often talk about things that we never planned to talk about. On that note, let's go and jump into boot camp. All right. What we're doing today, weekly cycles. Good call. Yeah, good session. Right. Let's end this call. We'll jump over into the other call. I'll get everything set up. Give me 2-3 minutes, guys. I'll drop a link in the chat and we'll go from there.
Mate, thank you.
Cool.
All right.
Cheers,
Thank
guys.
you.
Good to see you.
Cheers.
Bye, mate.